welcome back to another MonitorBase RockStar retention video. We're here. I'm Lily, VP of Business Relations.
Louis Zitting, CEO of MonitorBase.
And I'm William, VP of Business Development.
Today, we wanted to highlight a topic that we've seen cropping up in the industry as of late with a little special interest. So that topic is HELOCs and debt consolidation. So what are we seeing in the market that makes this topic relevant today?
We watch a lot of different transactions and activity of consumers, obviously, and there's so much equity in everybody's home that consumers want to tap into that for so many reasons, and that's no surprise to any of you. But we see a lot of that activity, and more specifically, there's a lot of home equity line of credit or second mortgage activity, and that's probably much easier to accomplish than a cash out transaction, and there's other limiting factors. So we really just wanted to bring attention to this for our super users, to help you kind of focus on that and figure out how to best execute for your customers.
And just on our side, like we're delivering our real-time trigger alerts, but you actually have a subset of those that are specifically for real-time home equity line of credit triggers. And then also on the predictive side, you get debt consolidation and cash out opportunities. And those alerts, I mean, sometimes those are great cash out, debt consolidation, just a full mortgage with an appraisal. Sometimes, the best product or best path forward for them is that HELOC product. So to us, it's like guiding our users and anyone using a product similar to this, where it's capturing those opportunities at the right time and really helping guide the customer down the right path for them.
So what are some of the reasons that a consumer, obviously, I mean, I think most mortgage professionals are already familiar with this, but let's just recap. What are some of those reasons that a HELOC might be really beneficial for consumers right now versus something like a cash out or, other sort of situation?
Well, I think I'd start by saying, rates are high for both a HELOC and for a cash out right now. So I don't think this is something that we'd really want to push to a borrower, but really what it comes down to is there's specific needs that's making them do it one way or another. So whether we like it or not, they're going to borrow that equity. And we're seeing a lot of those go the HELOC route. And I think it's just for simplicity or path of least resistance. Like, if you get a home equity line of credit, you go to a credit union and apply, it's like a week-long process and you're signed and done. There's like no appraisal, and if there is, maybe it's a drive-by. And you guys all know from doing a cash out, you've got to get an appraisal, you've got this, a full application process and everything that's involved there. So even in cases where the cash out might be beneficial, the ease of the HELOC sends people down that route. And also not knowing their options, because if they go to their community bank or credit union, they're just going to say, sounds like you want a HELOC. And then they go down that route. So we want to talk a little about, the benefits of one way or the other, and also to draw attention to, to you as loan officers. Normally, you probably don't think HELOC, but in this case, we've seen so many of our users and many lenders starting to promote their HELOC product that they got through a partnership or a wholesale lender or maybe even in-house.
For sure. And it's all about understanding the borrower's current circumstance. So to us, it's a matter of you being open to the possibilities. Because, I mean, we run into loan officers all the time that are like, nobody's doing cash out. It's like, well, they actually are. It's significantly more than you'd expect. And there are reasons people do it that you don't, that maybe aren't surface level, perfectly apparent right off the bat. So being able to engage and actually talk to a customer, ask them questions, understand their scenario. Sometimes it's just, they're doing a HELOC because they've got a 2.75 on their underlying, first, and they don't want to get rid of it. Other times they're going to do cash out because, some sort of life event and a divorce, for example, is just pulling them into a scenario where it has to happen. They have to get rid of someone off of that mortgage. It's not an option. And so, in those circumstances, someone's legitimately just not they don't have the choice except to do it. And we don't always see that when we look at it and say, I gave that person a 3.25. I have no idea why they would be, there's no way they're going to, be in the market for a mortgage transaction. It's like, we always advocate, really have the conversation, understand not only their current financial situation, but their life circumstances, because that's really going to steer what is going to be most useful for them. And Louis mentioned it, like they very often don't understand the options that they have. And, when you go to them and you're talking about, hey, you could go this route or this route or this route, and they have, benefits to each of them depending on your circumstances, you're likely the first person to be even having that conversation. Everyone else is trying to steer someone right down the first path that's, easiest for them. And as their, previous originator, in a lot of cases, you're really well situated to consult and help them out.
Yeah, and there's this might be a repeat, but I'm just going to go through it. There's situations where the cash out makes sense. For example, there's still plenty of people that got their, purchased a house within the last year when the rates were high. And at the time they put a lot of money down because they had a bunch of cash from the sale of whatever house they moved from. So they put a lot of money down and they want to tap into that to do some sort of home improvement, right? So the need doesn't necessarily, it may not be divorce or debt consolidation or something like that. It might just be, hey, I don't want to go and, move up. I don't want to buy a bigger house, or it doesn't make sense right now for us to downsize because of the rates. So let's do some home improvements to this house and love it. Stay here.
One thing that I think is interesting is just the amount of data that we have, and this is why we chose to talk about this topic today, is because we are seeing the data from, come in through our alerts. We talk about, William, you mentioned the real-time HELOC, trigger alerts when somebody is applying for a HELOC. But I think that data is really interesting because it shows an opportunity that can be nurtured. But I would love for you both to touch on how a loan originator might look at that data, because as you mentioned, William, earlier, it's not necessarily that the consumer is going to go down one specific path. It's about having that conversation, engaging, and understanding their situation so that you can help guide them as the professional through whatever their needs are. But can you touch on what that data looks like and how a loan officer can be prepared to navigate those conversations a little bit?
Kind of two things that I want to cover answering your question. One is, when we're doing our predictive analytics, what we're basically saying is, hey, Louis is very likely in the market for a mortgage product of some sort. And then we're looking at the data as well to predict which kind of mortgage product he's in the market, he's going to be in the market for. So oftentimes, we're going to say, hey, Louis really likely to be, listing his home for sale soon. And that might be based on a whole set of criteria. But the truth is, it's almost a coin toss whether he's going to list the home or whether he's going to do a debt consolidation renovation loan. And, both those patterns of behavior and scenarios might look very similar. And honestly, it could be a coin toss which one we tell you about. So when you're engaging these, just recognize it's, you don't come in guns a-blazing just pushing for a HELOC product or pushing for a cash out. Have the conversation, ask the questions, understand what their concerns are, and you'll find out, these are your customers. They're more than willing to tell you and really explore what the options might be. But really the other part of that, let me try and remember my train of thought. Okay. And really, guys, the other part of it is when you're particularly competing with, a credit union or a local bank who's offering a HELOC product, it is such an easier loan product program to go through the process of getting that I want to highlight the risk that puts on you. If you work with someone really hard, say they were a first-time home buyer when you helped them get their last mortgage, that process is really challenging. That may have taken 3 months, 6 months, even longer than that to go through and really prepare and get everything, all the ducks in a row, and finally get an offer accepted. That can be a really challenging and drawn out process. Now, contrast that with going to their local credit union in a 20-minute conversation. They've completed the application, they sign disclosures, and they're closed in a week without an appraisal, without dealing with a title company, without dealing with a realtor, a buyer's agent, like they dealt with almost nothing. It was the easiest mortgage process that they've ever gone through. Now, we as professionals understand the difference between the two transactions. But for them, they went through and they're like, well, that took 6 months to work with Louie, and it took me 1 week to work with Lily. Which of those do you think is going to make a more impactful impression on them from a customer experience perspective? And this is not at all bashing the customer service that we offer in this space. We're dealing with a different situation. And I've seen this with, clients that go out and do a streamline refinance. They're just like, wow, you guys were amazing. That was the easiest loan I've ever done. It was so much easier than the purchase transaction I did with my previous loan officer. And it's like, yeah, but it's just not even the same realm. But when they're comparing them, the borrower isn't making that distinction. And so you risk losing the customer to your competitor when they do these transactions, and they are as simple and clean and just a slam dunk that some of these, HELOCs can be. So even if it's a matter of you doing the HELOC, even if you don't make money on those or much money on them, if you can do the transaction, you're protecting that customer relationship. They're so much more likely to come back to you in the future. Whereas if you don't, the likelihood of them coming back to you in the future has become even worse. So it's protecting your database in a sense that I think is worth considering.
I think that's a great point. That's kind of one of the reasons why we stress that every contact matters, because the more often that you have your clients coming back to you and having a great experience, the more likely that you're going to have that client literally for life for every transaction that you have, and they're going to give you more referrals. So that's a great point, William.
Well, and we know that, there's not as much opportunity for you in a HELOC transaction, as far as commission, and but you got to consider them too. They're so much easier. You can do 2 or 3 in the time that you would do a cash out, and then you have the benefit of having served that customer. So, in the past, and also HELOCs are larger now, right? Because I remember when I was a loan originator, we wouldn't look at a second mortgage as even an option. It was like, no, let's just send them to the credit union. That's what they do. We can't make any money on it. But it's different now, and we're seeing it happen.
So as far as, what comes next or longer lasting results of folk kind of highlighting these HELOC opportunities, what are we seeing in the future as a result of these events?
Well, so in doing our predictive analytics, we get to see what's activity that correlates to other things, right? And identifying sellers that's top of our list right now, just because that's what everybody wants, and that's really kind of, besides some tapping into equity, we want to find a listing, right? It's good for you and your partners. So in doing that, we had found that a big correlating factor to somebody listing their home was somebody that opened a HELOC within the past 12 months. And that just kind of, that's where, we can't really always tell the difference of, is this going to be a debt consolidation HELOC, or is this going to be a home improvement HELOC? And then what the outcome might be very much depends on what they do with that. And a lot of times both of those can drive them to list their home. So, an example is my neighbor next door to me. They did this, huge home renovation, back in like 2022. They just wanted to remodel everything because they liked the house and didn't want to move. So they did like a full massive remodel. And then shortly after we were talking to them, they're like, we got it all done. And then we just kind of realized the house doesn't have all the room we want. Like, and we kind of want to be by our parents because our kids are growing up. We want to be a little closer to our parents. So that was one to where they didn't even really have the plan of remodeling and then listing it, but a lot of people do. And they might tell you like, yeah, I'm going to do some minor upgrades just so I can list it top dollar. And then I want to sell the house because we want to move to a different area or downgrade or whatever that might be. But yeah, in this case, that wasn't the plan, but it happened. And I think that's what we're seeing in the data is that the HELOC happens and maybe they pay off some debt, get in a better place financially. Then they start to realize how much equity they have and that could go towards a down payment for where they want to go next. So whatever it is, those are leading indicators to a purchase transaction. And then if they do plan and do want to stay in the house for years and years, this will make kind of a mini refinance boom of cash outs when we do see inflation come down and the rates coming down a little. We're obviously not going way back to 3% rates, but if you can get down in the fives, then it makes a lot of sense to refinance that first and combine the HELOC or the second to a new cash out and save some money on interest. So I think, that's the, keep the customer, and it's going to create another opportunity of either a listing or a cash out in the future.
So we've been talking about HELOCs, and of course, as you mentioned earlier, we're not trying to, have anybody push for a specific product unless it fits the, the consumer's needs. But what are some of those cases where, a cash out really still might be the best option over a HELOC?
So the biggest ones that we're seeing is how long do they plan to stay in the home? And then you kind of have to combine that with some other elements. A HELOC is a less expensive transaction than a cash out, generally speaking, from a closing cost perspective and title fees. But if they plan to be in the home for an extended period of time, if they're already at a relatively higher rate, so if they're at a 2.75, it's going to be harder for them to make sense of a debt consolidation, first mortgage cash out type transaction. Whereas, if they're at a 5.25, it starts to make a lot more sense. And so anyone that's gotten a loan in the past, probably 12, maybe even 18 months, just, depending on where they were at, it can still make a lot of sense for the cash out. Anyone with a lower credit score, a lot of the HELOC requirements actually push for it and really are only open to people with some of the top tier credit. And as a result of that, sometimes the HELOC's not even an option. And in those cases, the cash out can still make a lot of sense. It's, for us, we're looking at it and being like, well, why would you take on a higher rate on all of this debt? But if it frees up $600 or $1,000 in, monthly cash flow for them to pay off some of those 25%, credit cards, that can make a huge difference in someone's life, especially in a slightly tighter economy that we're interacting in right now. So, again, it's like people with significant equity currently have a slightly higher rate than what was the very low rates that we saw, in the past 3 or 4 years, longer term occupancy. And then again, those lower credit borrowers are all candidates for a cash out, where HELOC might just not check the boxes it needs to, and the cash out's the best route for them.
Well, and another, kind of a niche one, but a VA 100% cash out is a great option. If they don't have a 2%, 2.5% rate they don't want to pay off, a HELOC's not really going to let you go to 100% CLTV. So VA loan, 100% cash out, that might be a better option. And there's one more point I wanted to make here. And then there's the other part of, because the HELOC's so easy and that's a path of least resistance, if somebody's wanting to do a remodel of their home or put, hardwood floors in prior to selling, then the HELOC's simple, and also they don't have to draw that whole balance and pay interest on the whole thing. So to the consumer mentally, a HELOC's a way better plan if they want to do some home improvements. But once those improvements are done, then they can get an appraisal that's much higher than before they did that. And so it makes more sense to do the cash out if the rates allow that to happen.
For anybody having a conversation with a client, especially if they've gotten, a HELOC trigger or a predictive trigger on a cash out debt consolidation or something like that from MonitorBase, what do you recommend for how to navigate that conversation with the client?
to me, the biggest thing is understand their circumstances. Ask questions, engage them with an open mind. Some loan originators are, they're set in their ways in the sense of, nobody's doing cash out. That's like, we hear this over and over, but the truth is there are people doing it. And if your mind's closed to the possibility, you need to be the one that's exploring it with the borrower. The other part is, we have a lot of lenders who have found a way to offer a HELOC product. And so being able to offer both options actually opens up a ton of possibilities. So if your corporate office doesn't have it already, we advocate for exploring that further. It's going to give you the possibility of consulting people down either path, and that's going to give you a big advantage right now and in the future. So to me, it's like, it's just, act like it's your son or your daughter or your parents, and you're trying to understand and help them go down that best path. That's what they need. They need a professional that's actually really going to consult them through the numbers. It's hard to compare and understand which is the better deal. It's like my little 2-year-old son always asks, like, which is better? Like, which is the best option? Because, like, do you want this or this? He's like, I have no idea which is better. And honestly, I think that's what so many of these consumers are experiencing. It's like, you're telling me so much information here and so much information here, and none of it makes sense. Just tell me which is better. And maybe you can't answer that clearly for them, but if you can help them come to that decision by guiding them and asking questions and understanding their circumstance, that's what so many people need right now, because they're uncertain. And I don't know, the example Louis gave, I imagine if a loan officer would have really spoken with them, they might have found out what they wanted to do sooner. Whereas, something like that, I personally wouldn't love to go do a full renovation on my house and do all of that work only to sell it immediately, because that sounds like an nightmare.
Yeah, and it was like top tier everything they put in there, because they weren't planning on selling it. But actually they went out and ended up doing a full new build. And so, I think in the process they're like, this is great, everything's new, but it's still the same house. And now we want to just start from scratch, have everything we want. So yeah, and then I wanted to make a point of, in our alerts, our predictive alerts, there's the two components. We predict likelihood based on math and analytics, right? That's the machine learning part of it. And then our alert intel is us doing our best guess at what the transaction is going to be. So the numbers say a mortgage is probably going to happen, and then we say we think it will be this. Well, right now things are pretty different than any other market, and so kind of keep an open mind when you talk to them. If we say, hey, this is likely a cash out, don't take that as like 100% fact, because it could be that they are trying to fill a gap and then they're going to sell. And so it's really about, talk about the future conversation. Like, they might want to cash out or a HELOC right now, but what's the purpose or what's the plan? And then that's not only so that you can help them better, but then also you can know, okay, that's good. They just told me they're going to sell this house in 6 or 8 months. So you need to make sure to start to prepare that conversation with them and say, okay, let's get you, let's start talking about your purchase loan, right? So that we can be prepared, and you want to stay engaged with them so they don't go somewhere else for that transaction.
With predictive alerts, especially, I feel like you have to have the mindset of like nurture that person and their experience, and whatever their goals are, just keep on nurturing that person if they don't take immediate action. All right. Well, thank you so much for joining us for another RockStar retention conversation with MonitorBase. We would love to hear your thoughts. So be sure to comment, respond, share this video with any of your friends in the industry. We'd love to hear from you. And if you haven't already, be sure to subscribe to our blog. Thank you. Have a great day.
Thanks, guys.
Thanks, everyone.